Welcome back. Thanks so much for staying with us here on 405. Let's get to your market update this Monday. The JSE index up today, its highest since late December, in fact, of last year, tracking major global peers. Resource-linked stocks and financials are among the top performers so far today. But let's get you some real analysis. Petri Redelinghuys is a trader, and he's the founder of Herenya Capital Advisors, and he joins us this afternoon. Petri, it's always great to talk to you. Thanks very much indeed for coming on. It's always good to hear that the rand is faring well. Is that still the case so far today? And if so, what are the factors driving there?
Good afternoon, and thank you for having me. So yeah, the rand is a bit stronger today. I think the big move was really Thursday and Friday last week, where over those 2 days we saw the rand firming up by about 2.2%. So that's quite a strong move. Today we're about 0.25% stronger. So not really too great of a move if you take it into context the scale of the move that we saw on Thursday and Friday last week. But the rand somewhat firmer. I think it feels as though there's a little bit of risk on sentiment coming back into the market. We saw about 2 weeks of contraction in markets, or a pullback. Market bounced quite strongly during the course of last week. Whether or not that momentum continues for the rest of this week, I'm unsure. Particularly looking at the US market, it does look as if most of the bounce is over for now. So I do expect a slightly weaker sort of second half of the week, if you will. We might have a strong, Monday, Tuesday. Our market obviously being closed on Wednesday. Thursday, Friday, I expect to be somewhat weaker. But I do still think that there is quite a bit of upside in the commodity space. We see that, general commodities as well, even metals prices, energy prices, all the rest, seem to be on the up. So that is, I think, good news, particularly for our market, if you consider that a lot of our market is sort of commodity-facing businesses. A large part of our economy is commodity-facing. So for us, it's a good space to be in.
And then, Petri, oil prices are down 1%, and we know that over the past months, the movements there have been partly due to the situation between Israel and Hamas. The latest thing now is the ceasefire talks. But help us make sense of that development and what they tell us about the trajectory of fuel in the near term.
Well, I wouldn't hold my breath too much with the lower oil price. I think that obviously it is a bit of a reaction to the news that we saw over the weekend, that the ceasefire talks and all the rest, which obviously will reduce risk in oil supply. I think that's the major thing, is that whole region is a big supplier of oil, and the more it destabilizes, the more risk steady supply of oil is at. So that is essentially good news, but I do think that we are in a space where there's more than one kind of driver here. We're seeing, for example, a bit of a shift away from electronic vehicles. It was a very, everybody sort of rushed into EVs, and we are seeing European car manufacturers at least slowing down EV production and kind of focusing on hybrid vehicle production, which is obviously has an EV component to it, batteries and all the rest, but also internal combustion engines, as consumers are essentially preferring to buy traditional cars with traditional engines, right? So I do think that oil demand isn't really going to disappear as fast as what we sometimes anticipate that it would. So I think that oil prices are going to remain lofty for some time, particularly as, producing oil becomes less and less fashionable. In the context of sustainability and ESG and all of that. So I wouldn't hold my breath too much when it comes to lower oil prices. I think that the trend for oil prices is higher, and I do think that within the next couple of months we could probably see $95 a barrel again. We're currently trading about $88 a barrel, so it is quite a bit higher. I think in the very short term, the oil price might still be quite sensitive to, headlines coming out of the Middle East. But overall, I think, prices should remain trending higher.
I was looking at this next question, and I wondered whether the numbers here are actually correct. But the pay of Sibanye-Stillwater's serial dealmaker CEO, Neil Froneman, has dwindled from the 300 million rand he earned in the year 2021 financial year to 55 million rand in the year to the end of December. I mean, all of us would wish for his problems, but what does this tell us about the state of affairs there, especially in the context of the looming job cuts?
Look, I think, look, okay, let's be honest here. 55 million is still a healthy salary, right? But I think it's very interesting because in 2021, when it was reported, or 2022, when it was reported that Neil Froneman made 300 million, everybody was up in arms saying, it's disgusting how much these CEOs make. And now you see that when the pressure's on, he cuts his salary basically in six, right? So it is, I think, credit where credit's due. The management team is sensitive to the underlying earnings. So he's feeling a little bit of pain as well, if you will. Look, 55 million rand a year is still a lot of money, but if you get used to making 300 million, it's quite a big, a significant pay cut, right? So it's good to me, at least, to see that the company is willing to remunerate and give bonuses to people who make big impact on the business. I think this is something that we don't necessarily always realize. As Neil Froneman, as you say, serial deal maker, he has developed and built a business that is become, one of the largest in the world, really, in sort of the gold mining space, as well as in the platinum mining space. And that is really nothing to be scoffed at. I think, he took all the assets nobody wanted in South Africa and he's turned it into, well, a gold mine, right? So to be rewarded for that work is fantastic. I think that shows that the company's interests are aligned with, his interests are aligned with the company's. When it gets a bit tougher for the company, he takes a significant pay cut, right? It's 1/6 of what he used to earn. It's a big pay cut. And yes, as you say, in the context of potentially 3,000 jobs being lost, it is a tough time for some of the mining companies out there. I do think it's a great time to be a buyer of Sibanye. To be honest with you, I think that companies go through these phases where during the difficult times they become very lean, efficient machines, as they focus really on what is absolutely critical and important. So I think it's a great time to be a buyer of Sibanye. To be very honest with you, I don't see precious metal prices really coming down all that much. And I think Sibanye is going to be, is a great business.
Yeah, absolutely. The business factors aside, I'm struggling a little bit with finding some empathy for Neil Froneman there. But Petri, documents in a lawsuit filed by a former employee at Shell revealing its U.S. crude trading regularly earns about $1 billion every year. Why is this information relevant now?
Well, look, so I think the background story is here is that the manager of the trading floor or whatever got asked to, reapply for a different job or a transfer of divisions or whatever, and that would cost her around, she would lose out on a $6 million bonus. So she sued the company and lost. And in this process, it came out that this division, this trading desk that they have that trades natural gas and oil, and I'm talking like speculating in the stock market, makes around $950 million to $1 billion a year on average, which is around 12 to 13 or 13 to 15% of Shell's entire annual profit, right? So the trading desk makes an enormous amount of money. And I think it's interesting that, we think that Shell is obviously an energy company and they sell crude oil. Obviously because you sell a product, you have, it's probably in your best interest to hedge pricing for that product to make sure that you can, guarantee or have predictable cash flows and earnings going forward. But what's ended up happening here is they're speculating in the market as well as hedging and doing all sorts of things. And this trading desk is making $1 billion a year, which is an enormous amount of money. I don't think that this is necessarily, I don't think it's a shame or a scandal, if you will. The company produces oil and is every right in there, to hedge production. So, for example, if the oil price is up at $95 a barrel, it makes sense for you to sell a bunch of contracts that allows you to sell future production at the same price, right? If oil is, really low, then maybe load up on a few contracts so that if the oil price goes higher, not only you can make up some of the, call it lost profits that you could have made if the oil price was slightly higher. So I think that, all is fair in love and war, I guess. And, at the end of the day, companies are in the business of making money. And if they're oil producers, so they obviously know the oil market very well. So, kudos to them for capitalizing on that.
Yeah, absolutely.